Welcome to Markets Now. I'm Michelle Rook along with Oliver Sloat, Blue Line Futures, and kind of a mixed trade on Tuesday. And Oliver, we had two-sided trade in a lot of the grain and livestock futures, but a lot of that was kind of this end of the month position scoring, wasn't it?
Yeah, I think it was, and we saw a common trend here over the last couple of days in the grain markets where we trade higher in the overnight session, but really aren't able to get that follow through, and we get more participation at the 8:30 open, and that's really what the bulls wanted to see, to get that technical breakout. But as you had mentioned, I think this is a lot of end of the month stuff, and when you zoom out and look at where January wrapped up for a market like corn, we were up only 1.25 cents. So there were a lot of fluctuations and gyrations through the month, but we really didn't go anywhere fast. I think the market, a lot of market participants are waiting for new news to give us a technical breakout or potentially some long liquidation. Now, on the breakout side of things, that March corn contract we talked about running into chart resistance, that's 685 to 688. That's the December and January highs. We've tested and failed against that, I believe, 3 or 4 times now. If the bulls are able to chew through there, I think the market could potentially run towards $7, 704, which was the September, October, and November top end of the range. But I'm not sure that there's a catalyst really there to spur that. And with the shot clock winding down on the March contract, I don't know that it's going to be able to do that. I think a lot of the attention is going to shift towards that new crop contract going forward.
And soybeans also kind of run up into chart resistance at the January highs as well here. And so we're going to need the same kind of catalyst to get that over the mark too, aren't we?
Yeah, absolutely. And looking at soybeans, I think you're really focused in on what's happening in South America right now. I know that Argentina did get some beneficial moisture here over the last week or so, but it looks like forecasts are turning back hotter and drier, which I think has really helped this market climb back towards the upper end of that range. 1550 is going to be very psychologically significant for the market. If the bulls can chew through there, the market will probably have another leg higher. And soybeans have probably been one of the more constructive charts as far as the technicals go, posting higher lows and higher highs consistently for the last several months. So I think there's probably a little more upside in soybeans. I think corn and wheat are the ones I'm a little bit more skeptical of here in the very near term.
Yeah. Obviously, that market needed to put in some South American weather premium. The other thing that could kick us over that mark maybe would be demand, but is China's demand going to start going over to Brazil now as the harvest starts to come in?
I think that there's a high probability that that's going to happen. We know we had China back from their Lunar New Year this week. Export sales or inspections that we got yesterday were kind of in line with what we wanted to see, which I guess isn't such a bad thing, right? There's been big question marks over corn demand here recently, but that's started to, it's nothing to write home about, but it's better than what we were seeing. So I guess that's a step in the right direction, but I think the bulls really need to see those numbers continue to firm up in the coming weeks to really feel good about the upward potential here. And the other question with regards to Brazil is storage capacity. Do they have a place to put the crop when they get it out of the ground? And as of right now, it's not sounding like it.
Yeah, so you're going to get some harvest pressure when that comes in, that's for sure. Okay, so what about the wheat market? We did close mostly higher there. Was that end of the month short covering today? Or were we putting in a little weather premium? I mean, those HRW ratings dropped in most states.
Yeah, I think that was a little bit of short covering. 760 to 765 has been kind of an inflection point for the market. That represents a breakdown point from about a month ago. If the bulls are able to chew through there, I think we could potentially make a run at $8. But as with corn, I remain fairly skeptical here. I think the thing that wheat really has going for it is the fact that the funds are holding a rather large net short position. So the risk of a relief rally is there, and I think that could potentially come on a breakout above 765. So even if the fundamentals aren't necessarily there to spur a bigger directional move, I think fund flow has the potential to get that market back towards $8.
So live cattle futures mixed as we go into the inventory report. Unfortunately, when we're taping this, we don't have that in front of us, but a lot of bullish expectations. If those are confirmed, Oliver, will we go back up and test the contract highs, or do we need higher cash this week as well to fuel that?
Well, I mean, we're basically at contract highs, right? So
Right.
I think the market really needs to see some more bullish catalysts. I think the expectations are for a million head less. And I think a lot of the bullish catalysts are baked into the cake. If you look at where some of these deferred live cattle contracts and feeder cattle contracts are trading, we're at really historically high levels, which leads me to believe a lot of it's baked into the cake. Now, does that mean we can't go higher? Absolutely not. Of course, we can go higher. The fundamentals are strong. Don't get me wrong, but I do think that a lot of that's baked in, and the cash market is what we're focusing on here in the near term. We did firm up a little bit late last week, but will it be enough to really spur the momentum to the upside? I'm still a little hesitant there, and that doesn't mean I think the market's going to break either. I really would not be surprised to see live cattle just slosh around in a $5 to $7 range here in the near term until we can get a bigger directional move out of the range.
Hogs, we seem to have stopped the bleeding here with the reversals last Thursday, but building on that, how much can we do that until the cash catches up? And, do we get into a situation where these funds, which have gone short now, start to cover their positions?
Well, anybody that's bullish hogs is thrilled to turn the calendar over to February. We had
Yeah, no
February
doubt.
lean hogs down 1282 for the month. April was down 887. So it was, I don't use the term lightly, but it was a bloodbath in the lean hog market. I do think that we can start to turn a corner there. Now, you had mentioned the funds. Funds are net short lean hogs. The last time the funds were net short lean hogs goes back to 2019, and they only stayed short for about a week or so. On top of that, you've got a bullish seasonal trend that started yesterday in the August lean hog market. That seasonal trend goes from January 30th to March 8th. And over the last 15 years, we've seen the market firm 12 of those years for an average gain of about 442. So we're deeply oversold. You've got funds net short, and we're entering a seasonally bullish time of year for that August contract. I think that's a recipe to really carve out a low and erase some of the losses that we saw in the month of January.
All right, let's hope for better things ahead. Oliver Slope, Blue Line Futures with Markets Now.